Hey there, welcome to the new Go Trading channel. In today's video, we're going to learn about candlesticks and the different types you receive when trading. Let's start with the basics. Candlesticks usually come in two forms: bullish candles, green, which show that the price went up; bearish candle, red, which show that the price went down. Each candle has some key details that we're going to break down. Every candle has four main parts: the open, where the price started; the close, where the price ended; the high, the highest point the price reached; the low, the lowest point during that time. This applies to both bullish and bearish candles. Now let's look at some special types of candles. Hanging man. This candle has a small body and the top and a long lower shadow. It usually shows up after an uptrend and signals a possible reversal. When we spot a hanging man on the chart, it often means the price might start failing, which can really help with our analysis. Shooting star. This one's kind of the opposite. It has a small body near the bottom and a long upper shadow. It also suggests a bearish reversal. As shown in the example, the price dropped right after these candles appeared. Bearish engulfing. This is a two-candle pattern. The first one is a small green candle. The second is a bigger red candle that engulfs the first. When this happens, it's a strong sign that the price could drop. And the example, you will see exactly that: a clear downtrend right after the pattern.